Nice to see you all here. What's going on? So you want to trade like a economic report today? That sounds like a good idea. I'm Rob Booker. Welcome to you. We're here on Friday, March 8th, 2013 to trade the non-farm payroll report together. And by trade the non-farm payroll report together, I mean, like check it out and see if it's worth trading. You never know if it's going to be worth trading. I have a sense that if you want to trade it today, you're going to have to pull out your brass-plated, excuse my French, round objects and sack up, because the non-farm payroll report has not been the easiest thing in the world to trade as of late. But I'm going to guide you together with my good friends through a virtual fantasy world of delight. That's what I promise. Scott, did you bring the delights? I brought the fantasies.
I brought a little bit of delight. Yeah, they're still in the oven. I want to warm them up. I like my delights a little bit warm in the morning, but they'll be ready shortly.
There's some movie where people are always offering other people Turkish delights to eat. And I finally realized they were cannibals. They were offering each other people. They wanted to, like, that's what it had to be. I'm positive that's what it was.
Fairly disturbing.
Yeah, pretty disgusting. So happy to see all of you here. Wow, what a great crowd this morning. I'm thrilled to have you join us. And Jennifer will be joining us in just a moment. And it's time to get right to the charting and the planning and the happiness that goes along with it. And if you've got any delights or fantasies, then get those out of the oven and get those ready. We'd love to hear from you if you've got questions or comments, and especially if you have jokes. That's especially important to us. And once again, I'm Rob Booker, joined by Scott Welsh, and Jason Piles is here with us also. He's the co-host of the Traders Podcast, and Jennifer Thornburg is on the way. She's just making us all some jalapeno coconut coffee. And I'm not joking about that. We'll have to ask her about that once she gets here. The euro dollar is on my screen right now in front of you. This is a support and resistance chart marking the major zones of support and resistance on this currency pair. It's the currency pair that I'll focus on today. In a moment, we'll see what Scott says is overblown or overbought or oversold or ready for a reversal. We'll take a look at that as well on the boss later. And Jennifer will show us some of what she's looking at as well. But I am almost 100% completely focused on the euro dollar today. I will look at support and resistance zones on other currencies as well. If this were a normal trading day, where I thought that everyone in the world wasn't smoking crack and then sitting down at their computer to eat humans and trade like drunken monkeys, then I would say that we're probably going to see 30.67 on the euro dollar on a move down, or that we would see 31.60 on a move up. I think sometime today we will actually see 31.60, or maybe Sunday or Monday. We are recovering here on the euro, and that's a likely target during a recovery. It's a very likely target. However, the non-farm payroll report can be just a crack trip on top of a cocaine-infused, whiskey-drinking wild weekend where you wake up next to your college roommate, which is actually also your sibling. And nobody wants to be a part of any of that business. So I think today you might find that this non-farm payroll report business causes the euro to just go wild, down to a number like 30.80, and then straight up after the economic report to a number like 30.35, and then straight back down to a number like 30.80, and then a series of smaller up and down movements. You've seen a non-farm payroll report like that before. That's like a non-farm crackhead report. And today's just the kind of day where you could see something like that. That's why if you really want to sack up and try something crazy, you could sell at the highs and buy at the lows. And in situations like this, you could even wait to see it bounce off those levels if you want to do that. Or you could wait for a breakout of those levels and trade the breakout. You would wait for it to break out, fall, and retest those levels and come back again. But that's the kind of craziness you can expect on a day like today. Now, there's much more for us to get to. There's much more for us to talk about. But that's kind of what we're thinking of this morning. The best place to ask questions this morning is right inside the webinar, the questions panel on the webinar. We won't be checking any of the chat anywhere else for this morning since there's so many people that attend this webinar. It's just easier to focus on one area for questions. We'd love to know where you're joining us from, so if you could take a moment in the webinar and tell us where you are and where you're joining us from, we'd love to hear from you. It's nice to see April here and Patrick and Seneth and Leguber and Terry Van Dorn and Dan Courtwright and Stephen and Mel, and nice to see all of you here. Terry from Ohio, Richard from the UK, Peter from Pismo Beach. It's really, really great to see you. Hi, Beth from Ontario. Got friends from the UK, Florida. Hi, T. Forbes. Hi, Karen from Lincolnshire. And Mel Spencer from San Diego. Phil MC from Wales. Monterey, Mexico. Washington, New Mexico. Los Angeles. Snowy, Utah. Sergio from South Africa. Gold Coast of Australia. Ken from Miami. Nice to see you, Ken. Welcome. Matteo from Finland, Helsinki. Scott's living in Mariano Rivera's future home. Don't fall in the pool. Just kidding.
Oh,
That was a terrible joke.
that's terrible, terrible.
Don't fall in the pool. Venice, Florida. Crossville, Tennessee. Hey, Glenn. I knew that's Glenn as soon as I saw that. Miami, Santo Domingo, Blue Ridge Parkway, Southwest Virginia. Hi, Lisa. Hey, Aris from Greece. It's so nice to see you. It's really nice to see you. We'll look at the Japanese yen in just a moment. Got lots and lots of friends here. So happy to see you all. And Jennifer's here too. Hi, Jennifer.
Good morning.
So nice to see you. Or your name.
I hear you, yes.
Or hear you. How's the jalapeno coconut coffee this morning?
Well, how'd you know? It's pretty darn good.
So happy to hear that
Hot and
you-
spicy.
Hot and spicy. Nice to see you there. Ashok is here from Oregon. Nice to see you. And Russell is under a rock in Arizona. And Jay Washington is at the DMV. I don't know if that's really what he meant, but that's what he wrote. Okay. Well, there you have it. Scott, what are you looking at today? If you want me to give you the control of the charts, I'm going to ask you to take a look at whatever you'd like to show us is overextended or in need of some kind of a retracement or anything else you've got going on.
Well, we'll start from a big time frame and then move into a shorter time frame. Can you see my chart just fine?
I can see it.
Yeah,
Excellent. This is the euro dollar that Rob was mentioning in the 60-minute chart. And what we're looking at on the screen here is, and this dashed line is the 800 simple moving average. And what this is for us is a proxy for fair value, meaning this is the fair value of the euro dollar on a 60-minute chart. What we're looking for as far as retracements that Rob mentioned is something that's extended away from fair value, much like Warren Buffett. He waits for something to get away from fair value and then trades it back toward fair value. So we're looking at possible retracement on the euro dollar. The problem is, mathematically, we want it to be away from fair value for a long period of time. So what we're looking for on this chart is for price to be away from fair value, which it is, which is good news. But we want it to be away for a long time, with the idea being that the longer it's away from fair value, the better it is for us, and the more likely it is to retrace back. If you look down at the bottom of my chart, this is the oscillator. Go ahead.
No,
This
go
is
ahead.
the oscillator indicator. I'm sorry, I'm talking over you. What'd you say?
No, you said to go ahead to me, and we're just enjoying hearing you talk.
Oh, well, and I enjoy speaking to you. The oscillator reading, Rob's indicator at the bottom of the screen, all it does is count how many bars away it's been from fair value. What we're looking for on a 60-minute chart is somewhere at least in 400. We'd love it to be 500 bars away, meaning it hasn't touched fair value in 500 bars. However, as we sit here this morning drinking jalapeno coffee and eating delights, It's only been away for 283 bars. So what does that mean? Well, sitting here, I would say I'm definitely looking for a little bit of long movement in the euro dollar at some point. But because it hasn't been away from fair value for very long, I don't know if it's going to rocket up there today. Generally, in these NFP reports that we've traded, it's gone up, it's gone down, it's gone back and forth, and ended up back where we started. That's very typical for weeks. But if you had to twist my arm, and please don't, if you had to twist my arm, I would say I'm looking for some upward movement, which we saw a little bit here. However, nothing imminent on the 60-minute chart. If we go to a different chart, more on the 15-minute, there's a bunch of wild, crazy stuff going on. This is my automated strategy chart. But what we're looking at here is, as far as retracement, here is fair value on a 15-minute chart, and it's barely been away. It just hit fair value earlier yesterday morning, 3/7/2013, and it's not really doing a whole lot. Usually this happens when it's right before an NFP report. Usually it kind of hovers around fair value and then breaks out one way or another. So this particular chart trades a breakout. So two things I'm looking at. Number one, as far as retracement back down, nothing I can really say about that. It's only been away for 91 bars. That doesn't mean it's mathematically likely to go either way. However, if we get a breakout, if let's say it comes down after the report, touches the 800, then all bets are off. It can go up or down. This particular chart would be looking for a long move here too. So this kind of coincides with the 60-minute chart. I would love this morning to see this price come down, touch my Bollinger Band, stochastics already oversold, and maybe get a long move on the 15-minute chart. So I guess overall an upward bias, although not a strong one. And I'd be looking to possibly get involved in a trade long if I can get a nice retracement and then watch it move up. That would be my goal for this morning on the medium-term charts. I also have a short-term chart too that we can look at whenever you want. If you want to send
Yeah, let's look at the short-term chart, and then Jennifer, kind of move on to whatever you can see on the chart.
Overall, 60-minute bias, as we said, is slightly long. The 15-minute chart is right at fair value. So these are more long-term trades. These are trades that can last days, especially if you're trading a 60-minute chart. It could be days, it could be weeks to get that to move all the way back up and get to fair value. Down to the 15-minute chart, even though it's a smaller chart, this trade would also be a longer trade, minimum probably 5 days. Because if we get involved on this trade, mathematically I'd be looking for an over a 200-pip move. So this is a long trade. The final thing I want to look at is a very short-term trade. And these trades last almost always within a day. And this is something that we can watch closely maybe as the numbers come out. What we're looking at here in this chart is a much shorter term fair value, or moving average, excuse me. It's not fair value on this chart. Because it's such a short-term average, we're just talking about very, very short-term fluctuations, very, very short-term trends. And what I'd be looking for here on this 15-minute chart is we're right at our moving average right now, meaning it's fairly trendless. Again, waiting for the numbers. I'd be looking for it to break below the average, get a slight retracement and go short, or I'd be looking for it to come above this very short-term average, slight retracement on the RSI and go long. So this one we can just kind of wait and see. There's nothing happening on this very short-term chart, but if we get involved in a trade, this will only be a couple hours. So we've got weeks on the 60-minute chart, probably long, although no real bias. We'll have days up to a week if we get a breakout on the 15-minute long-term fair value chart. And this is our little short trend chart. We're still going to have to wait and see.
How short-term is that chart?
It's a 15-minute chart, but the moving average is much, much shorter. The moving average on this particular chart, if it ever clicks on, is only a 35-period moving average. Okay. This is a very, very short term. We want to get involved when the trend shows itself just in the last 35 bars, and we get a slight retracement. We're trying to get involved in that trade right away. So
all right.
That's probably something's going to happen here pretty soon. We'll just have to see.
When Scott refers to fair value, Scott's talking about the 800-period simple moving average. It's the basis for a lot of the trading systems that we've developed over the years, and we'll give you more information about that as we proceed in the webinar today or at another time, but we've done a lot of work with the 800-period simple moving average. So let's move on to Jennifer. Jennifer, you can take the screen and show us what you're looking at this morning, and then when we come back to me, we'll look at the dollar, yen, and a bunch of other currency pairs in rapid-fire fashion.
Sounds good. Come on over to my charts for a moment. Well, I'm going to make this really simple this morning. I'm doing all my analysis from the 4-hour charts for this non-farm payroll trading opportunity. And the reason for that is because I'm essentially just sort of looking for tradable spaces, and I don't have super ultra fine-tuned entries and exits on the shorter time frame charts this morning. Just looking for spaces where I can try to capture 30 pips if we get market activity going in one direction or another. And I really like the 800 simple moving average, just like Scott, and I always love to see his analysis and see how he has mastered the art of trading with that tool on his charts. And I've noticed that on the 4-hour time compression, the euro dollar is just really hugging up against its 800 simple moving average, having a difficult time, breaking away from it as it, it has for some time now. So the spaces that I see as potentially tradable spaces for euro dollar, all I need to see it happen is if it does go down, I just want to see it go below my 50 simple moving average. That's this bottom line here. Currently, that is at 1.3057. A move below that level, and I will be looking for a sell targeting approximately 30 points, 30 pips. And on the upside, it's not quite so clear because I don't have a whole lot of room above the high here to the top moving average, but I think that's still going to be my call, is just above the high, this line right here. Let me see if it'll give me a number, 31.16. If we get significant movements above 31.16, the 100 simple moving average at 31.75 is my next target. A break above that level is good for another 30 pips on top of that, which is from 31.75 on up to 3,200. So those are the spaces that I'm watching. Essentially, I'm using these moving averages as sort of support and resistance levels. They can sometimes be targets, they can sometimes be entry points, and I'll be using them sort of as both of those things. So to the downside, nothing for me until price gets below 30.57. If we get a substantial move going in the upward direction above 31.17, I think it's just a little bit sketchy in there, but there is enough room for me to try to capture 30 pips as we head up to the 100 simple moving average. And if there's a lot of momentum behind the move to get it up and over the 100 simple moving average, I'll definitely be adding to that long position, looking for another 30 pips on top of that. I'm just going to try to remember, I'm not even going to talk about dollar yen. I'm going to save that for Rob, because I know that's his favorite pair.
Oh, thank you so much. I appreciate that.
I am quite fond of dollar CAD, and I've noticed that sometimes it will make a nice move on non-farm payroll when you're least expecting it. What I like about it is price is sitting right here on top of my 50 simple moving average. That gives me an entry point, and there are 75 pips down to the bottom line, which is my 100 simple moving average. I would like to sell in that space if price breaks below that level. Also helping me out with this one today is the RSI, which you'll notice RSI is sitting right on its 50 line, and if we get a move on price below that 50 simple moving average, I'm thoroughly expecting to see RSI will have what it needs to break below the 50. Hasn't been able to do that for quite some time, and I would like to see it break through the 50, heading down for the 30 level. just as an indication that we have some room and some momentum and some space where we can participate with a sell-off. If this pair goes up, I'm not going to buy it. So that's it. I only have sell plans for dollar CAD. And pound dollar is in the same position. All of my majors are giving me these beautiful spaces between what I call the combo lines. It's my 50 and 100 simple moving average. There's over 120 pips of space in that one. Dollar CAD is really, this is pound dollar, has really been struggling, as you know, and so I'm not touching this one until it gets up and over the first line, which is my 50 simple moving average. That level is 1.5096. A move above 5096, and I will be looking for a buy. And for anyone that might be interested in selling cable, there's nothing wrong with the idea of continuing with this downtrend to sell below the recent lows. I won't be doing that today. It's just gone far enough for me that I'm now just looking for retracement moves, and when they show up, hopefully I will be there to take them, and I will wait patiently for that to happen. Right now, recent lows are around 1.4966. A break below that lower level, there's just nothing wrong with taking another shot if this one takes another leg lower, but I'm looking for the space between my simple moving averages. So if you don't have any questions about that analysis, Rob, I can send it back to you and we can have a look at your dollar-yen chart.
All right, let's take a look at some of those charts. To get ready for trading the NFP, as we switch back to my charts here.
Okay.
To get ready for the NFP, it makes a lot of sense to mark the major boundaries. Jennifer does that with the 50 and 100 simple moving averages and looks for breaks beyond those levels. That explains why on the pound she's looking for buys into the moving averages, and on the dollar CAD she's looking for sells into those moving averages. That tradable space is what she's looking for. Scott looks at the 800 period simple moving average and calls that fair value. If you want to look at just pure support and resistance lines, that's what I'm going to do today, and we're going to mark the major boundaries using those levels. Yesterday, when the US dollar Japanese yen took a trip upwards even further than where it had already been, we reached highs that a level that we really haven't seen in a long, long time. In March of 2008, the dollar yen fell to 95.67 or so, and we're right back at that level now. This is an excellent level to watch for this to bounce off of and come back down, as you kind of see it doing right now. The next major level of resistance above this mark doesn't come until 97.73. For those of you that are dollar yen bulls, 97, just round it to 75. It's a long way up there. And before it's going to take a trip, like a long journey, it's going to say goodbye to all its friends, pack a lunch, make the rounds. And so it's not just going to jump up to that level today. It probably is, over the course of this year, going to get to that level. But it could take the entire rest of the year to do that. And in the meantime, it could take a break and come back down a bit. If it does come back down, you'd look for something, I'd say, reasonable, like 95.30, or this previous area of resistance at 95.10 for a retracement back down. So if it does fall, 95.10 looks like a nice target if it does retreat. Of all of the currency pairs in the universe that we can trade, the dollar yen has, in recent non-farm payroll reports, been one of the better moving currency pairs. So a break below 95.67, this important level that we're at right now, and then a retest of that level, so a breakdown through it, then a jump back up to it, and then a drop back down, could take us to 95.10 today. I'm still going to trade only the euro dollar. In most of these cases, when we talk about a currency pair breaking a level and trading it. Most of the time, we're talking about just a break, not necessarily a close of the market beyond that level for those of you
Especially
that,
today.
especially today. I'm more inclined to look for a break of a level and then a retest of that level. So as we're waiting for the Aussie dollar to load on that other chart, for example, if the euro dollar breaks above my little barrier here, I would look for a break above that barrier and then a move back down to that barrier and then a move above. We call that a hook or a Winnipeg, a lot of different names, but our friend April is here. We call that an April hook or a Winnipeg or a pullback. There's a lot of different names that's gone by over the years. Okay, so let's see if we can pull up the Australian dollar, US dollar, for those of you that are interested in that pair. Okay, the Australian dollar, US dollar is right at resistance that I got to draw on my chart here. It's probably going to rise up and hit this mark, this red line. It's not very high above where we are right now. 0280. I would venture to say that if you are the betting kind of person, you could take a trade right now before the non-farm payroll report and target 0281. That's only if you are completely insane, of course, and you want to trade before the report comes out. But that level is probably going to get hit, and then you might look for it to rise above that level, retest it, and then maybe go for 0300. Or if it comes right back down off of that number, you might look for it to retest 0255, especially on a volatile back and forth crackhead type non-farm payroll report movement. Of course, so far we haven't even looked at the economic news and what the expected numbers are. We not only have the U.S. non-farm payroll report, but we have the Canadian employment report, which is also a really nice mover. Sometimes it's a better report than the non-farm payroll report. All right. We're expecting 162. My guess is we'll see 155 to 165, somewhere in that region. And that's not a number that's big enough to really move the market and break it out and keep it moving right after the report is released. You need to see this sub 100,000, below 100,000, or above 200,000 in order to get a sustained move right after the release. Those kinds of moves that you would remember from 2008, for example, or 2006. Those crazy non-farm payroll report moves that would move hundreds of points within a short period of time. If it comes out as expected, then people will think that price is in the right place, and it won't move as far. And so there you have it. If you want to look at other currency pairs, we can certainly look at those, like euro pound. I don't have much support and resistance on that, so that's probably a waste of time. We could look at something like the euro yen, which yesterday rose up. Oh, look at that. We hit the level, 125.67. Look at that.
Okay.
So that was my next level of resistance on the euro yen. On most mornings, I will tweet out a link to support and resistance zones on the major currency pairs that people trade. These work really reliably as profit targets and stopping points during moves. And that next level was 125.67, and it got there. That's fantastic. So another piece of evidence, in my opinion, that we've reached a level where we could take a rest here. And if we drop back down on the euro yen, you might look for it to return to 125 even or 124.90. 124.95. You might look for it to return to that level. So we're 3 minutes away from the economic report, and let's see cable one more time, and then there's cable. 50.77 is the next resistance if this does make a move upward, but there might be an interim level before that. We're kind of at that interim level right now. Uh, one more piece of evidence that maybe we're at a time when it needs to rest. But if we break through 50.77 is a lock. If you're a bull on pound dollar and we break through the red level you see on my chart, 50.42, and we retest that level and move up from there, then 50.77 is next. It's gonna get hit next if we rise up and stay above 50.42. If we move down, then 49.50 is probably going to get hit. But it's a little bit more crowded and messy on the way to that level, so that could be a messy move down. But on the move up, 50.77 is going to get hit. Chris asks how I determine those support and resistance levels. I spend 10 minutes on my charts maximum, total, across all of them, and I draw support and resistance across levels that have already been hit in the past. It's just traditional support and resistance. Nothing fancy. You just read a book about support and resistance and you just get it done. Or you watch the video series online that we did or something like that. Aussie New Zealand is just a mess. I don't have much on this pair. I'll just zoom it out. Yeah, I mean, you can see a return to the highs, 24.30. This pair is such a mess. It's so spiky right now.
Look at all those tails right there. It's just ridiculous.
Yeah. Tough to get a real good reading on that one. And how far do I look back for support and resistance? It changes every time. I'll look back as far as I have to go. I had to go back to March of 2008 to get a new level on the dollar-yen this morning, for example. So I'm going to switch back to the euro-dollar, and we're going to wait for this economic report to be released and for all the traders in the world to go absolutely out of their minds. I'll put my focus on the euro-dollar. And we'll take a quick look at the Walton Strength Index before the report comes out. The Walton Strength Index measures the relative strength of all of the currencies in our little universe against each other to give us an idea of what's the strongest and what's the weakest. Right now, my MetaTrader charts are frozen, so we'll come back to that after the report is released. For now, the report has been released, and you can see that the euro-dollar has broken out below 30.80. So what you would look for now, if you think that the euro needs to continue to go down today, is a retest of that level and then a sell off that level. We're dropping to support at 30.40 right now. Let's see if it bounces off that level or continues through it. And I'm sure someone here has told us what the number is. 236. So that's a blowout number. That's a big deal number.
Whoa.
I'm so glad Mitt Romney got elected. Look at the stimulus to the economy. I'm just joking. I hate politicians. I don't care. That's just a joke, everyone. Don't get mad at me. Wow, that's a nice move. Okay, watch here, folks. I would not be involved in a position right away. If Jennifer or Scott, if you take something, let us know. I'm guessing, Scott, the euro dropped to the 15-minute 800 period simple moving average. That's my guess.
And it did, and it went right on through. Yes.
Okay. So let's take a look at that longer-term support and resistance. 30.16 is the next level down on the euro-dollar. That level is likely to be hit, but you got to find a way to trade to that level. You can't just jump in. So 3,004, 3,016 is a zone on this.
I sold euro and I sold dollar CAD as well.
And I'm thinking about you could
Aussie dollar just made a huge move.
Oh, it did? Let's take a look at that. Wow, look at that. Aussie dollar, big move on that 5-minute chart. I prefer, I know this sounds insane, I prefer to buy the euro if it goes, oh man, look at this move coming right back. I gotta say, that's, I don't know if anybody out there who would want to buy it at a time like this, but my goodness. Maybe a retrace to 30.75, 30.80 on the euro, and then a move back down to 30.16, 3004, maybe. If your MetaTrader has stalled or frozen, that does happen. Karen took 30 pips. Enoch took 50 on cable. Oh my goodness. And Jennifer, when you have a moment, you can let us know what level you sold the euro at. Like I said, I favored a buy trade. I know that's insane. Back up to 30.75, 30.80. I talked about it before, right when we started the webinar, that this whole movement could just go back and forth, back and forth. Stephanie sold the euro and took 16. James was in and out for a gain of 30 on pound yen. Holy moly, you guys. That's pretty crazy stuff. Jennifer, what level did you sell the euro at?
I sold it, hold on and I'll tell you exactly. Yeah, it kind of slipped me. I sold it right as it was crossing over that moving average that I'm watching, but right about the level it is right now is the level it gave me because I'm right at break even.
Okay, so at about 30.40, that's that level of
right, and I
horizontal.
sold dollar CAD at 0264.
So we'll take a look at that as well. Dollar CAD. So their employment report came out as well. We can check the numbers on that and see how that did. CAD employment was 50. That was a boom, boom, pow number. Wow. 7,000 expected,
Whoa.
50,000 created. Brett sold the US dollar, Canadian dollar. Paul sold dollar yen a couple of days ago and is now thinking about moving the stop loss on a position. See if we can pull that up. Well, if you sold it at 93.34 and you're trailing it at 95.34, you bought it. So you bought it. I'm so sorry that I thought you sold it. I wouldn't trail it necessarily. I would just go for 97 even today on dollar yen to start with. That's the round number up here. And then I just go for 97. 96.50 is a lock. It's already hit it once. It's going to hit it again. And
so I took 30 pips on dollar CAD and 25 pips on euro dollar, and I'm done.
Okay. So the euro dollar has hit 30.16. That's the number we talked about this morning. That's the level of support here on the charts. That's why I draw those boundaries early on in the game. And so let's talk about the economics here as we watch the euro drop to 30.16. Let's talk about the economics. Why would, on a plus 200,000 jobs report, why would the dollar strengthen? Here's how the rationale goes. A good jobs, and it can go either way, but I'm just telling you how people are interpreting it today. 2 months from now, they can interpret the same information completely differently. What they do with this number is they say 200,000 jobs means the U.S. economy is growing stronger, creating a lot of jobs. So what we need to do, because jobs are strong, is we need to buy the dollar. Because if jobs are strong, then people are going to be making more money. And if people are making more money, they're going to spend more money. And if they're spending more money, they're going to borrow more money, and they're going to build things and expand businesses. And that means the Fed can raise interest rates at some point to slow down the economy a little bit. So it's a very, very, very short-term bet on a big, long-term type of a problem. But people don't care. People do crazy things in the short term, planning out long term. So this is all a bet at the end of the day on interest rates. That's what this is. If you didn't get a chance to sell the euro and you think you want to, what a tough day to do it. But you can look for the hook at 30.40 and put a really tight stop in, like at 30.45 or something like that. Let's look at Jennifer's dollar Canadian. Might take us a moment. Here's the dollar Canadian. Yeah, the chart is just totally messed up. I'll have to go back to the euro. We'll come back to the the dollar Canadian at another time.
Do you want me to show it on my screen really quick?
Yeah, let's take a look at that.
So this is dollar CAD 4-hour chart, and this top line is my 50 simple moving average, and that worked as a really nice entry line for me. As soon as I saw price moving over that line, I went ahead and took my trade. As a matter of fact, right before the report came out, I had placed an entry order to sell so I wouldn't miss it. Which is a really smart thing to do if you know right where you want to get in. I did not do that with the euro, and I didn't get the same great entry by the time that trade opened. So it's really nice. I just really like to see a nice clean move into that nice clean space, and my actual target would be down here at the 100 simple moving average, but I'm the type of trader that I like to take, a piece out with clean margins, and I'm looking for a space of about 70 to 100 pips, and I want to take about 30 pips out of that space. So that's what I managed to do this morning on dollar CAD. Also, I was watching the setup on the RSI, with RSI having been sitting on this 50 line for such a long time. It was just a really nice clean entry, and nice that it played out that way for us this morning. I know at least one other person, Brett, I know you got this trade as well. I heard Rob comment.
Yeah, Brett got a lot of people got that dollar CAD trade. I've heard from a bunch of people.
Yeah, I hope so. That was a really clean setup.
And just for the record, the Aussie dollar did hit that 0.281 mark and then dropped right from that mark and is on the way down. If you're in the euro and you're thinking about next support and resistance, you're at the next support and resistance. 30.16 is a major level of support and resistance on this pair. If you're thinking about making money today as opposed to anything else, 30.16, where we're at right now, is a really nice level on euro dollar. The next level lower is 29.70, but be careful about staying in for a level like that. Just be cautious about it. And remember, we're at a level right now that's a really nice target. Anything you want to look at, Scott?
You can go back and we can look at the short-term charts if you like.
Yeah, sure.
I'll send the charts, the screen back over to you, Scott.
All right.
Here we go.
And here you see, I'm just looking at the very, very short term for the moment. You can see a whole bunch of currencies. And this particular screen, when I talk about fair value, as we mentioned earlier, those are longer trades. And these are the charts that I get involved in shorter term trades. And you can see on my chart, if you can see the blues and the reds, those are all of my automated robot taking trades in one direction or another. The blue trades are successful trades, and the red are stop outs. And there are a bunch of blue trades. It's been a very, very good 8 days of March as far as short-term trends. And these particular charts get into, if it's a very short-term move and there's a slight retracement, then I want to take little chunks. Much like Jennifer, who took 30 pips, she could probably get 100, but she takes 30. Same with these. And what's interesting, I think, about the trades from the report this morning is that the New Zealand dollar, you can see on this chart, they had a successful trade actually just a few days ago. And leading up to this report, I think it's interesting to interpret the economic reports based on charts rather than actually knowing the fundamental analysis. I know you ask me about fundamental all the time, and this is where I get my fundamental analysis from the charts. It's been a very successful month of 8 days, like I said, of trading short-term moves. Here we had entered yesterday, and nothing had really happened with the New Zealand dollar. But because we've been so successful with all the short-term moves, going into this report, I figured, like Rob said, maybe like a 155 or a 160. We probably could have continued on this and made this a short little long trade. You can see on this big turn, that was very unexpected. The plus 200,000 was pretty unexpected and not anything that I think we've seen even in these reports that we've traded live. And it came down and stopped me right out. Now, in this particular system, it trades once or twice a day. It's a lot of trades. You know, combined with all the currencies, it's plus roughly about 500 pips so far this month. So this isn't a big deal. But I thought it was interesting that according to the short-term movements, we were looking for something pretty mild and continuing on this long trend. And to have that report come out and have it reversed is interesting. Same thing happened over here on the pound dollar. You can see we had a couple of a long trade that stopped out, then a short trade that made it. And we were actually doing quite well right before the report. You can see the bar right before the report came out. We were looking for a nice short-term winner, and instead it reversed and got stopped out, which again on these charts it trades so much it's not a big deal. But to me this is interesting because that number, looking at these short-term movements, that number obviously was something that not a lot of people were ready for, and it caused a lot of extreme short-term movement. As far as my longer-term trades, nothing's really happened. These short-term movements don't really matter on a fair value type of chart where you're trading for days. But on the short-term charts, to me, what's interesting about the number is that it obviously shocked some people because of the big movement and because a lot of the short-term movement was anticipating a long trade. So I thought that was interesting to see the big spike.
It is interesting.
And when this all settles down, and this is obviously, these are all 15-minute charts, when things settle down, then I'll get back in. If the trend now has turned, as you say, and it goes, and for example, the pound dollar is now going short, then we'll be involved in that, and I'll be looking to take short-term trades on the downside. But right now, I've got to let this play out, and actually, I could be back trading these particular short-term moves probably within an hour or two. And you can see I entered over here on the Swiss yen. We've just entered long too. The short-term movement here wasn't involved, and it's been a very good month for the yen pairs to go long. The Aussie yen has had, I think, 5 or 6 short winning trades in a row, and you can hear the Swiss yen, another couple of really easy short-term moves. You can see the trend is clearly up in the short term. So we'll be looking, even though there was a retracement, we're back now to our entry. So this is something I'll be watching for the rest of the day too. But again, in these short-term systems, I just don't sweat any particular trade. It trades so much. Whereas the fair value trades, you kind of have to watch and pay attention, and those trades you have to manage with moves to break even. But the Swiss yen, even though there's a lot of movement, it seems to have died down now, and you can resume your trading on the yen pairs, it looks like.
That sounds good. I love looking at those charts. So you have an automated system running that takes lots and lots of trades.
Yeah, you can see, as I mentioned in the yen, you can see long trade, long trade, long trade, long trade, long trade, long trade. 1, 2, 3, 4, 5, 6 in a row since March 6th. All of them, the Aussie yen is trying to go long when price is above the very, very short-term moving average. We get a retracement on the RSI, and it just gets out when it goes extended the other way. So we're just looking for short-term moves. But the yen pairs have just been phenomenal in March with these short little long-term or short little long trades. Short little long. And with the trend being up, I wouldn't be surprised to see if this RSI gets down to oversold again, I'll be getting involved again, and I'll try to ride this long trade, taking little chunks all the way.
That sounds totally brilliant. Let's come back to the euro. I'll take the screen for a moment and make myself the presenter. You can see here on the euro, we hit 3,004 just a second ago. We hit 3,004, and that level was another level of support. That was kind of the next interim level of support. It's not a surprise that we've bounced off of that level. Once again, if you're short the euro and you're looking for good targets, you're kind of at the good targets. Cable's got a great target at 48.70. I know that some of you don't want to hear that cable could go down more. And I don't know if cable can go down more. This is a different currency pair, different everything. But that's the next level down on cable is 48.70. You can see here that it's probably stopped a bazillion people out of their long positions as it went down. A lot of traders were were long pound, and that did not end very well. The euro hit 3,004 or so. The next level down on the charts is 29.65. That's asking a lot, even from this economic report. That's asking a whole lot from this. I do not expect that level to be hit necessarily. Dan P just took 10 on a euro yen short, and euro bouncing off of the old 4-hour down trend line, and that makes complete sense to me as well. Let's look at Dan's euro yen. You can see here the euro yen dropped to 124.95. That's the number we talked about, everyone. You can see here that's the number we talked about at the beginning of the webinar. 124.95 was hit. This is in the midst of an uptrend, so you don't want to necessarily stay in longer than that on that trade. Not that you can't get more, but that's why you draw these boundaries and these levels before everything starts, because that's a great level for it to hit, and then after that level is hit, it doesn't necessarily continue past that level any further. And that's true of the euro at hitting 3,004 and 3,016. It kind of takes a break after those types of things happen. Lots of you took trades. Seneth took 15 pips on the euro yen. Peter's long the euro, stop below the low. Peter, I like that trade, Peter. Not many of the rest of you like that trade very much, but I don't mind that. You can have a stop right below the low, Peter, and you can give that a chance. That's not bad. Euro yen on the short-term chart, hitting support. I don't have any trade on the euro yen past that idea that it might hit 124.95. I got nothing other than that.
I had a setup for euro yen, but I just I had my hands full with the other two.
Did you get any slippage on your dollar CAD position, or did that fill pretty well?
10 pips.
Wow.
Yes, I did, and I had trouble getting into the euro as well. And dollar CAD I entered with an entry order, and it still slipped me. So
It's surprising that we could get in at all, really.
Yeah, I never used to have so many problems, but 2013, I don't know, I just I've been a little bit less lucky. Maybe it's finally catching up with me after all this time.
Yeah. I'm going to see if I can run MetaTrader now. I'm running MetaTrader on a Mac using Crossover. I don't trade for MetaTrader, but I do chart for MetaTrader for specialized indicators.
I was just going to say also, you know, there is such a thing as slippage, and as your trading platform maybe freezing up right at that moment when you're trying to enter a trade, and that can be really frustrating especially on a non-farm payroll type trading day where you're making your decision really on the dime and you need it to happen quickly. And that's part of the reason that I plan for a smaller piece of the action right in the middle. So what I'm always talking about, having some margin for error. It's not necessarily trader error either. A lot of the times you just can't control when you are going to get slipped 10 or 15 pips, and that's really unfortunate. But luckily, I still got my profit target because I had enough room for error planned into the trade.
That's smart.
Hopefully that's helpful. If you're one of the people that gets frustrated with having your entries and exits get messed up by your platform.
That's good advice. Here's the Walton Strength Index. This is an indicator built by my associate Wes Walton at my company. Wes has worked for me and worked with me for years and years and years. The Walton Strength Index measures the relative strength of currencies against each other. Right now, the euro is weak, the dollar is strong. Of everything out there, the dollar is probably the strongest of any currency out there right now. Also weak is cable. Aussie is relatively stable this morning. You could see that in the midst of all of this, that the Aussie is relatively not going anywhere. So the Aussie would have been a terrible trade to take. Japanese yen is in red. It's reasonably strong. So you could see that dollar yen, for example, isn't necessarily the best trade in the whole world. Well, maybe not right at this moment. Yen is slightly strong, and the dollar is also pretty strong. So you're trading two things against each other that are quite similar. The euro dollar was really one of the better trades today. Euro is weak. Pound is weak. We could also look at New Zealand, and we could look at Swiss here. It'll just take me a moment to bring those up. That just measures the strength of currency pairs, and we use that when we trade live in the trading room to just ascertain whether or not a position that we're taking is worth keeping. So MetaTrader is really, really crawling right now this morning. Peter out there in webinar land went long the euro down here at the lows, 3004, 3005. If those lows are broken, then Peter's probably going to dump that buy trade, and we could see this currency pair go maybe as far as 29, maybe as far as 29.70 or so today. Yeah, MetaTrader is just peeing all over the carpet this morning like a bad puppy. Just can't handle the truth. Slippage does not depend on a VPS or any other thing. Slippage just comes from your broker. They're just having trouble handling all the orders at the same time. Peter Carras got long the dollar Canadian at 0241 with a stop below blah, blah, blah. That's a nice trade. Any thoughts on dollar Swiss? Sure, we'll look at dollar Swiss and we'll look at pound New Zealand next. Here's pound New Zealand. Probably fell out of, yeah. Fell down to recent support. 8041 was hit and then retraced. Looks like this is trying to stabilize here. For sure, it looks like it's trying to stabilize this downward trajectory that it's been making. I haven't looked at dollar Swiss in, who knows, a long, long time. So let's look at that. Dollar Swiss is keeping its gains for the morning, you can see here. Started out at about 94.50, and it's 70 points higher with almost no retracement whatsoever. Let's go back in time and see if we can find some levels to use as support and resistance. Well, we hit one today, 95.12. Next level might be 95.47. Next level might be 95.85. So I'd say 95.47 is next on dollar Swiss. But it's already made a nice move, so you don't want to be too greedy. Jay's MetaTrader 4 is working great. And I did look at pound New Zealand. Somebody asked me to look at pound New Zealand again. I did. 80.41 was hit, and there's nothing more here. It's trying to stabilize. There's no trade here, but the major areas are 80.41 support and 82.03 resistance on this. There are your major levels. If you're short, 80.41 is a great target, was a great target, was pretty much already hit. And if you're long, God have mercy on your soul, number one. And number two, 203 could be hit, maybe. Maybe could be hit sometime. Don't trade against these pound trends, everyone. Wow, they're just too savage. They kick everybody's butt. The only place to see the Walton Strength Index as of right now is inside Jennifer's live trading room. Jennifer and I trade together 2 times a day, 4 days a week, and we'll send you out an email with more information about that with the recording of this webinar. And that's about it. So our friend Peter is probably still long the euro dollar. And Jennifer, do you have any other trades coming up for the rest of the day?
I don't. I'm actually done for the day, and 6 a.m. on a Friday, that's a pretty darn good feeling.
Yeah, right. No kidding.
Yeah, I'm done. I picked up, non-farm payroll trading for me is really bonus trading. I don't make my living trading the non-farm payroll report. I make my living trading everything else during the rest of the month. And but I really look forward to trying to pick up a few extra pips on non-farm payroll day, planning some trades around some volatility that we can also attempt to plan for, and I feel really great that I picked up just over 50 pips, and I'm good for the day. Can't wait to rest up this weekend and get back into the action next week.
Yeah, absolutely. Scott, any last thoughts on how things look here?
Yeah, I'd love to.
Maybe, Jennifer, you want to send the charts over to Scott?
Yeah, sure.
I would love, as the day goes on, and probably going to need an hour or so, at least 4 or 5 15-minute bars. But what I see here and what I'll be looking for is probably long trades on the yen pairs because it's been very, very strong short-term upward movement. And I'd love to get involved with some short trades on either the pound dollar or the New Zealand dollar or the Aussie dollar, any of the dollar pairs. I would love to get involved in some short trades today and try to get in and out before 5 o'clock. The long-term charts with everything hovering around the fair value, the 800, probably won't get a trade on those. Probably have to wait till next week. But I'd love to get involved in this movement, this dollar movement. I'd love to get some short trades maybe before 5 o'clock today.
So you got some work ahead of you still there, Scott.
Well, yes, the robots need to get to work.
There you go.
They didn't do much. They only finished up a couple trades. So I need them to get to work this afternoon and give me some good pips.
Yeah, I'm gonna hire me a robot one of these days.
Yeah, it's just getting your language. Everything in your head moves so fast, and there's so many things that you can process so quickly. If you can just get your words down on paper and let the robot do it for you, but I have a feeling that the robot could never trade as well as you do. I just have that feeling.
Well, that's very sweet of you, Scott.
My brain's so simple that the robot can out-trade me. I'm too
Well,
black and white.
I've been fighting this powerful head cold all week, and it would have been a good week to have a little assistance from a robot, that's for sure.
And that is the plus. Automated trading, yeah, I feel like humans can probably make better decisions, especially an unemotional human, can probably look at more things and process it and do a better job. But the robot is an awful nice friend to have when you're feeling down. You can sleep, you can go to work, maybe you're just sleepy, you want to go to bed early. So
Right.
in that regard, that's what I love about automated trading is that I don't have to stress. Even though it may not be as good as a human, it can still do quite well. And it does allow me to have some freedom away from the screen or some freedom when I'm not feeling perfect. So it's ups and downs, there's pros and cons, and that's why you have to decide who you are. But the robots are doing a decent job, so I'm going to keep them around at least for a little while longer.
Awesome.
Well, we appreciate you joining us today. we're really glad you got a chance to trade with us. It was pretty straightforward from Jennifer's trade. She was the trader of the day, really. She planned it right and got it done. If you want more information about how to work with Scott, Scott's been trading for 10 plus years and has made tens of thousands of dollars trading in both the stock market and in the currency market. And we've been working with Scott for a long, 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 long time. Scott's also an athletic coach for tennis pros and has had a huge amount of success in his life, and you've most likely heard him on the Traders podcast many times. Scott's a successful trader that really makes money. If you're interested in the robots, developing a robot together with him, getting access to one of the robots that he has, or just getting a little bit of private coaching to take your trading to the next level, you can contact Scott Welsh at swelsh, or wait.
It's, yeah, SCOT Welsh, yes.
Yes, Scott Welsh, 1T, at gmail.com. See that on the chart right in front of us right now. And I would strongly encourage you to get in touch with Scott if you really are serious about robots or developing robots, or in your discretionary trading if you're just struggling with something in particular. Scott's a lot of fun to talk to, and Scott's enormously helpful. You can contact me on Twitter at Rob Booker and Jennifer at Gentho3. And we'll send you out an email a little bit later on today once Jason uploads our non-farm payroll report webinar. We'll send you out a link to the webinar. We'll send you out a link to get in touch with Scott if you're interested, and a link to come and join Jennifer and I in the live trading room next week. If you're interested in doing more live trading, that would be awesome. Hope you had a great session. Lisa Perry got plus 10 on the non-farm payroll report. So Lisa, you are on track. You are definitely on point, and I'm super happy to see that. The euro seems to be on the way down to 29.70 for those of you that are short the euro. Good luck to you all today. If you're done trading, have a wonderful weekend. And if you're not done trading, please don't do anything to damage all the good stuff that you did today. And we'll see you around next week if you join us in the trading room, or if you get in touch with Scott. We'll see you later, everyone. Thanks for a great morning.
Thanks, everyone.
And Jennifer, I think you have to end the webinar. I think I've lost control of that.
I will do that. All right, everybody. Have a great day. See you all soon. Bye.
The organizer has ended the session, and this call will be disconnected. Goodbye.